Hello, my name is Orlando Torresella from fincastorresella.com. Well, today, October 17, 2024, the European Central Bank has lowered interest rates again by a quarter of a point, 25 basis points. Let us recall that the European Central Bank lowered interest rates again on September 12, 2024. They meet every 6 weeks and see if they can lower them, raise them, etc. Let us remember that in June it began to lower interest rates from 4.5%. And now we will take a brief break to look at the three interest rates that the European Central Bank is playing with banks. Because the European Central Bank does not lend money directly to businesses or families. The European Central Bank lends money to banks at three interest rates. The first type of interest is called the deposit rate, the deposit facility. This means that the surplus money that the banks have, which they are not going to lend on that day, because this is for days, is deposited in the European Central Bank, and the European Central Bank gives you an interest, the deposit rate. Well, this deposit rate, today, October 17, is 3.25%. 3.25%. The second interest rate that the central bank plays with the banks is the lending facility interest rate. This is the interest rate at which the central bank lends money to banks for a period of 1 week. That's the one that usually appears in the news. Today, that interest rate is at 3.4%. Because let's remember that in September, look, it was at 4.25%, and in 1 day they lowered it from 4.25% to 3.65%. 60 basis points. 3.65, and now they have taken away another 25 basis points, and it is at 3.4%. This is the credit facility interest rate. This is the interest rate that banks borrow from the central bank. And the central bank tells the banks, well, I'm going to charge you this. In this case, today 3.4%. Note that this is above the deposit rate, which is currently at 3.25%. Or the European Central Bank gives them less money in 1 day if they deposit the surplus money than if the bank were to borrow it from the European Central Bank. This is logical. And the other type of interest is the main financing operations rate, which is overnight. And this is when, instead of banks depositing money in the central bank, banks need money in a day and they ask the central bank for it. And that, today, the interest rate today, is 3.65%. That is, note that there are three types of interest that the central bank manages. The first, the deposit rate, which is the surplus money that the banks have. They deposit it in 1 day, and today it gives you 3.25%. Then, the rate on main credit operations, at 3.4%. If you want to borrow money from a bank to lend to companies or families, it will cost you 3.4% per week as the interest rate. And if you want to order it urgently in 1 day, it is more expensive, at 3.65%. And you will also have to put up guarantees for this more expensive type of interest. The emergency type. These guarantees will be government bonds, which, in theory, are the safest. Because, of course, the state debt is not the state. It is each of the people who make up the states. That is, it is an act of faith. So, closing the parenthesis that we opened a few minutes ago. The three interest rates that the central bank is playing with today are as follows. The deposit rate is at 3.25%. The credit facility is at 3.40%, and the emergency rate is at 3.65%. On June 12, the credit facility, which is currently at 3.4%, was lowered from 4.25% to 3.65%. Look at the sharp drop. from 4.25% to 3.4%, which is today's value. In these 6 weeks something is happening. And also, note that, of course, the deposit rate, which is the interest rate at which banks deposit with the central bank, and in one day they give them an interest rate of 3.25%. The Euribor is below the deposit rate.
Está por debajo de la tasa de depósito.
When the Euribor is below the deposit rate, the Euribor is the interest rate at which banks lend money to each other for 1 month, 6 months, 3 months, or 1 year.
Pues cuando está por debajo de...
Well, when the Euribor is below the deposit rate, it means that banks are lending at a lower interest rate,
que de aquí a pocos...
because they think that in a few months the interest rate will continue to fall.
Recordemos, en el año 2016, marzo...
Let us remember that in March 2016, the European Central Bank set rates to zero and the Euribor began to turn negative. And this was because the deposit rate was even more negative. It was 0.25%, 0.5%, and, of course, the Euribor with which the banks lent money before losing 0.5% by putting it in the bank one day. Well, they tried to lend it a little more than that, but just a little bit, because things were very, very complicated. There was a lot of risk on all sides, and no one trusted anyone. So, it is very important that you know these 3 concepts: deposit rate, the credit facility, and the emergency loan. And each of the interest rates had applied to each one, because, of course, we see the news and they say, they have lowered the interest rate to 3.25%. Yes, but that is the deposit rate interest rate, the lending facility rate, which is what banks ask the central bank for 1 week. Is it 3.4%? Is this very important, that the Euribor is below, because the forecast is that rates will continue to fall. Inflation appears to be going down. Here it was 1.5% in September, and let's hope it continues to go down, although we don't know, because the geopolitical situation, well, you see how it is. We don't know what's going to happen. But regardless of all this, our daily bread, as our Lord Jesus Christ says, the material spiritual bread, that is the true bread, the bread that generates value. Because with all this inflation, all this, in the end the value and price are completely different.
El valor de una onza de oro...
The value of an ounce of gold, of a gram of gold, is always the same. What changes is the price. And why does the price change? Because there is inflation, but the value, in reality, in Roman times or here, remains the same. A gram of gold. So, focus on your own value, on the value that the Spirit is capable of generating something material.
Con el pan nuestro material.
With our daily spiritual material bread. And congratulations to all those with mortgages. Stay tuned because mortgage rates are going down. We already saw this at the previous central bank meeting. And this is very important because every point of decrease in the Euribor in 100,000 euros is 1%. That is 1,000 euros per year.
Y 1000 entre 12, pues son...
At 1,000 euros a year over 12 months is between 80 and 90 euros a month. At ease, someone who has a mortgage of 150,000 euros, well, 1 point is 1,500 euros a year, which is very important, because of course, those 1,500 euros are much better in the pocket of a family, in the pocket of a few people, of a couple, than in the pocket of a bank or the European Central Bank. Well, I hope the video was helpful to you. Although this topic is a bit tedious, this thing about interest rates, we always try to shed some light on the matter. Because, unfortunately, in the difficult years of 2008, 2009, 2010, and 2011, we experienced suicides, people who committed suicide. Remember, the 4 clauses, people who did not have their mortgage reduced. The rates were lowered and the mortgage was not reduced, and they kept paying huge amounts. They had been given fixed-rate mortgages when the Euribor reached 5.39% in 2008. And unfortunately, we suffered the loss of people who were here with us and are no longer here. These videos are dedicated to all those people who are no longer here, so that it doesn't happen again. You will quickly and easily understand how this market works. Learn what the Euribor is, its rates and mortgages.
para que no vuelva a pasar.
so that this kind of thing doesn't happen again.
Saludo.
So, greetings. Until the next videos, God willing, Orlando Torresilla